45 years of experience to help you manage your portfolio and protect your wealth. Remember to subscribe, like, and share these videos. In tonight's video, we're going to talk about the employment numbers coming out tomorrow. If you recall, just yesterday on Wednesday, we were all excited about a possibility of a recession, and all of a sudden the markets reversed and traded higher over a couple of tech stocks. So let's go ahead and get into tonight's video and unpack what's about to happen. Welcome everyone. Sorry for being late. I was trying to use some new software to stream with and it didn't happen. So maybe next time, maybe next week on Sunday night. Anyway, welcome. And as we're looking at coming into the final day of the week, the second day of May, and getting employment numbers, I'm a bit concerned. We look at the ADP numbers. They came in at 62,000. And then we saw the reaction the other day to GDP, all that stuff. It was like everybody was all whipped into a frenzy. And I continue to argue that these markets, while the rally off the low has been impressive, I think it's been close to 20%. What's kind of interesting, what no one's talking about, if we went to new highs from here, it would be roughly another 12, 14%. So it would be a 30% rally off the lows, which means that would probably be it. So you'd be rejected if you did get up there. I still argue that we're not going to be going to those type of levels, that we're going to normalize within that weekly context. We'll talk about some of this tonight on Sunday night's broadcast. I'll go into the longer term aspects of the markets. We'll have a bit more data to look at after today, Friday, speaking for Friday. And like I said, I don't see the markets actually making any giant move from here. We've already made a giant move, right? So normally, you take a 20% move and people are screaming, we're in a bull market, we're in a bull market. But then usually at that point in time is where the markets reject. And we're pretty close. I'll talk about some of these numbers tonight. I believe I went through some numbers in the Substack last night. Like I said, when I'm doing these broadcasts every day and writing newsletter every day, they kind of blend together where this content came out. But the realities is that the employment numbers are probably going to be less. They're expected to be 125,000 new jobs, and maybe so. Maybe it comes out like ADP. We could get a big surprise here today. And one of the things I'm just setting up on the other screen while I'm talking to you is the possibility of looking at a fairly big miss, right? And that's one of the things that I think we could see or not, right? We don't know. If we look at the weekly claims and the continuing claims, we're not getting anywhere with that because those numbers are like frozen. Everybody talks about them every week, but they don't actually change. I think I've said this before. We've only had a couple changes that were out of line with what's been going on in a couple of years' time, and there has been reactions to it, but we're not seeing anything there that would lead us to think there is weaker numbers, other than the ADP numbers were weak, and sometimes those numbers are distorted and they don't have a lot of relationship with the actual BLS numbers that we get. So that's going to be, I think, an interesting situation to unpack. Really, I'm impressed by the White House this week, even through the celebration book tour that they did with the first 100 days. They really still haven't come up with anything material for us to go through and hang our hat on, some kind of deal, something that might mean, progress in what the, I guess, ultimately the tariffs are going to do. We may see some things come out maybe over the weekend. Maybe that's how they'll shock in all the markets. But I don't even hear the talk as we're going right now. So let's set up tonight's show. I think we'll be able to get through it fairly quick. When I get through the markets and all that, I'm going to bail on you tonight. I've had a very long day, and I'm ready to be done. But I want to get this last bit of information. Then, of course, there'll be a Substack letter come out later tonight before the U.S. Open, and then we'll ultimately I'll set up exactly in that what we'll probably be going through on the longer term level. So let's go ahead. I just want to check and see if we've got the results of the database real quick before I change screens. It looks like everything's been run. That's a good thing. Okay. I'm just checking some numbers here. Bear with me one moment. All right. So it looks like everything's done. Let's go ahead and take a look here. So the database from the standpoint of the markets are looking like we get a little bit more traction here, roughly 490 new buys, and actually it's pretty much a rotation. It's a positive rotation, but we're looking at about 290 sells. So we got a little bit more buying than selling, but we're starting to see this thing flatten out. And I think that the results of this is going to be that the database is going to stall here. We're just right at that 48%. I think we're going to stall right in here. I've been talking about, and we'll go through the technicals on the S&P, but I've been talking about that the possibilities are that we could go up to the 200. There's some fib targets and some numbers that we can talk about from the standpoint of not only fib targets, but there's a GAN number that comes up right around 5,800. It does not have to go there. Today could have been it. If you use the data sheets, which I just finished running, I'll bring that up in a few minutes. If you looked at the data sheet last night, R2 was the targeted high. We went just a few ticks above where R2 was yesterday. It was a great sell off of that. We literally moved 70 handles, but there was a good 50 handle move off of the top, and then it consolidated, and then we saw a dump at the end of the session. And I think maybe a lot of that was just some squaring up of books ahead of the employment numbers in the morning. That's pretty much what we're seeing there. So that's looks like the setup there. Nothing big here. Before we go into the S&P, I'm going to bring up unemployment reports. So I wanted to see if we're getting any major traction, if we were going to get above 48%, and we didn't. We're 46.71, so we're right there. It's amazing. If you folks have been around the channel for a while, you'll know that these numbers it just like moves, like, it goes down to 22, down to 12 to 8, and then it goes right back to 22, 28, and it just kind of stair steps into. It's interesting how these tranches of orders we get. We had a lot of them over the last couple of weeks, and they just move right within line of those numbers. And most of those numbers are just numbers that have been going on. I've been watching this database now since technically 1998 is when we built the first model where we could see a whole database view and bring out these statistics from a standpoint of the individual stocks and sectors and groups that we've broken things into. So let's take a look at this unemployment chart here real quick. So of course this was the sickness days, this big spike up above me, but this is where I want to kind of focus in on here. What it looks like is being forecasted. We'll see how it all plays out. I mean, we're looking. Let me fix this. So we're looking when we get out here, where my cursor is right now is 2028. So we're looking out, but there seems to be a general trend that looks like employment's going to increase, unemployment's going to increase as we go along this line, and kind of staying along these projections. And I was thinking about, if this is the case, what would be the thing that would cause this to happen? And maybe AI is going to take out a lot of folks, and there's going to be a shift in employment numbers and what they look like. That's one of the possibilities. The economy's going to weaken. The tariffs are going to fail. You could throw all kinds of stuff out there, nothing that would be reality, but at least give you some thought process. And it's interesting for the forecast, we're still looking here at kind of maintaining the employment numbers, possibly down clicking a little bit here. I'm just going to bring up a number coming back into right at like maybe 4.15%, just down a little bit. So maybe we get a downtick as we come into tomorrow. But the crazy thing that, and the position we are in the markets right now, is trying to determine what market sentiment is. The good news is, excuse me for looking away. Yeah, I'm just looking at, during the day today, we did see the order book fill back up to a reasonable level, meaning there was pretty good liquidity in the trading today. That was very, very methodical, and it was not as erratic as we saw at the end of the session on Thursday or on Wednesday. So we're just seeing actually some stability come back in. But the bottom line is, it looks to me that everything is kind of getting a little frothy up here, and we're probably going to see maybe employment will be the thing that triggers it. I think there's a good possibility that there's still so much uncertainty, depending on how these numbers come out, then markets seem to be responding in extreme cases both ways. I mean, think about it. We rallied from Wednesday, we rallied like 4.5%, 5% on Microsoft and Meta earnings. Like, that's the whole planet, right? So there's a lot of things going on. The Mag 7 still has its foothold on a lot of things from the index standpoint, but the only thing I would comment here, we were just looking at the WaveTech database. There has been a fair amount of short-term buying going on. I'm anxious as we come into the end of Friday. We will run our intermediate models on Friday night. So it will be interesting when I come and see you on Sunday night, what kind of activity comes into the database as we complete this week. And I don't usually like to evaluate a month until we get the first full week, and it's falling kind of strangely, but it'll be what, the 5th on Monday. So we'll see how this thing plays out, but I'll go ahead and do the long-term stuff on Sunday night. All right, so let's go ahead and let's move on to the futures here. We're on monthly. Let me get over to a daily chart. Yeah, I almost want to take off some of this stuff. Let's take a look at the algos. We're getting peak values, and I talked about this in Substack last night, that we still have the possibilities on, I believe the NASDAQ was able to hit its 200. We'll look at it in a minute, but the algos are getting to peak momentum to the upside. Looks like on Monday, and then there's going to be some deterioration, not at least from the forecast at the moment that it's going to be drastic, but we still have these Fibonacci targets down here. So you'll see the red dots right here. Those are still that forecast. Let me go into some detail here because I think there's something to be learned from that. I know last night somebody was on town. I've been wrong. Actually, I projected when we were over. If we go back, and you can go back when we were getting into this pattern here. The projections going all the way back when we were up here at this 6,000 level, when we started to break down, was originally to go to the 200-day moving average. I thought maybe we'd get some kind of configuration like this. Well, we just went through it, and then we get the bounce back to I call it the backside, or back to the 200. Then we get this leg down. Well, when we were right here, this is where the targets came in, these fib targets came in. And so what we're currently doing here is basically staying within this box formation that I'm going to draw here. So this is your support zone, and as the market unfolds here, we've seen this configuration here, like an ABC, and it depends on what type of configuration we get. We could get like some kind of X wave here, and then another ABC pattern, and we could end up with this box growing to the next level where we would be centered. Now just draw in the 200-day is going to be the ceiling. If you I know a lot of folks are, like I said in the opening comments, a lot of folks are telling me, oh, we're going to go just to right to the all-time new highs. I think I figured out it would be a closer to almost a 37% gain to get from the lows to get up there. So that's optimistic. But I think what's realistic is the pattern that I've been talking about for weeks. And in a minute, I'll like I said, on Sunday night, I've looked at and glanced at some of the charts. I think everything's playing into my scenario, and the result is trying to protect assets in this type of environment. Some people, if all your trading is a Mag 7, then that's fine. I've tried to emphasize that this channel is really about understanding the macro and the short, intermediate, and longer term movements so you can make better decisions. That's why I do this, okay? And as I've told everybody, 4 years, I trade better when I'm writing. I've been writing market commentary since 1986, even for myself, my own firms, or for institutions. And so when I'm writing, I trade really a lot better. My old buddy Steve Nissan, who's a candlestick guy, he openly admitted that he's like a really good analyst but a terrible trader. And I happen to be able to combine both worlds and be able to really set these things up. And I've been involved in a lot of big trading operations. And so the bottom line is these boxes that I'm talking about here will continue to unfold incrementally. The fact that we rebounded, I always ask this question, and I've told you folks on here, yesterday I had my AI hat on, and the beauty of AI and the tools that we have out there right now, it's about asking the right questions. And that's pretty much on life in general. But if you're asking the right questions, you tend to get a bit of it helps you to develop a perspective of what you're doing. So the questions that I'm asking right now, what would make the markets go to new highs right now? And it's virtually nothing until we get this information from the Trump administration, what this strategy looks like, who's going to join, we don't know anything about it. So to be making a fundamental statement at this time with absolutely no background is impossible, my opinion. So what I see is markets trying to stay within certain bounds. I've told you folks probably the best trades are to be selling straddles on options and selling calls and selling puts in this range out of the monies, and you should get all the money. It should all be yours. You probably should go 4 to 6 weeks out, and you're still going to get all the money. And so, but these patterns that I'm promoting here are also mathematically based on algorithms. I'm looking right now, our intermediate database is 20% long. Maybe it'll improve a little bit tomorrow night, but it's probably not going to get over that 42% threshold. That's going to take a number of weeks. So everything is going to take time. And since we see these big rip markets that rip, like we have in the last couple of weeks, if you really look at it, most of the rally that happened the same day of the announcements, right? In what was it, Independence Day or something? So let me just back out some of this stuff so we can see the chart again. But what I'm talking about is this right here, where this day, this was the day right here that I'm talking about. And you're looking at, I talk about this whole range. If I draw it out here until the last recent days, this was the secondary low, but this is the pattern right along this Fibonacci sequence that I was talking about. This is where we've been trading. And it looks to me that we're getting pretty close when you start to see patterns. I'm going to draw over just above where I'm sitting here. I'm going to draw this pattern over here. I'll use boxes, but when we start to get into these type of choppy ranges here, these are just non-decision type patterns, and they're great for trading, writing calls, buy low, sell high in these small ranges. They stay within the market grid, all that. And then you get what I've talked about before. I got a lot going on here, but we get that big volatility blow up, the bubble, and then you have to normalize, and then we normalize, and now we're getting where we're starting to flow again. And it looks to me that for the most part, if I clean up all this stuff, for the most part, markets want to stay in some sort of range here. So, and this would be my argument going forward. And then would be probably a range like this, and I'm going to draw this in so we can see. Maybe this is going to be the question: is this actually upward ABC? Is this an X wave? And then what I suggested earlier, we get another ABC, but we stay probably within this box. This upward box is probably right around that 66, like 50, 58, 58.30. I don't think there was a 59 handle in there, but 58.30. And then we're looking back down here at the 5100. So that would be kind of a normal contained range. But let's say if the volatility gets higher, one of the things that's always a possibility in this pattern, once we get one of these ABCs, is that we're going to have to challenge this box that I was just drawing out, right? So there still could be, I don't know, probably 100 people on the YouTube channel and comments have told me that we missed out the trade of the lifetime. There's not even close. And 2020 we had the Fed, throwing trillions of dollars into markets. They're still doing QT. Everything is still very static and there's uncertainty. So this is not 2020, okay? This is 2025, much different. So the question is, will we retest these lows? Is this little environment that's been created through some Fibonacci numbers, is that valid? Is that where the market's going to hold? That's what we're trying to figure out right now. Based on a database, everything is telling us that we have potential to get up to that 58, 50. We'll just round off numbers, 58 to 5,900. But there's nothing to say that today, Thursday, the value that we got up to in the last couple of days wasn't it, that's not the end of this rally. I'm not saying that's it, but there's always a probability. We get the news in the morning, we punch through, and all of a sudden we're trading at the 21 period moving average. So let me clean this up so we can move on. But you folks get the scenario that I'm talking about here, is there is absolutely nothing other than the market sentiment that could push us up higher. But we're starting, one of the patterns, if you look, there's a box pattern right at the top of where that market grid. Market grids have channels up and down. They get the volatility blow up. But right now we're in what I call a square pattern, which means we have a short-term consolidation pattern set up. And then out of that, typically after a big move up like this, we're going to retrace and go back into those fib targets. So they've been able to stay valid in this environment. Let me do one last thing here. And this is what the forecast for all of the indicators, moving averages, everything's flat at the moment until we get another reset and get some increase in the volatility. So let's go ahead and, I was trying to figure out, I hadn't seen it, but we were short of the 200 on the NASDAQ. I thought maybe we'd get a move up, but the configuration of the PPMs, price pressure momentum indicators, they're all the same. Before I move on, hang on one second, okay? I just realized I didn't show you the data sheet for today. Let me just... copy this link. I'll show that to you. Okay, so here's a data sheet. It's kind of interesting. It's 55%. It's basically a neutral kind of day coming in. As what's saying, I took this just a little bit ago, 55.08. Excuse me, we're trading 56.08. I'm sorry, we're trading 56.45. So we've rallied a bit while I was talking. But the ranges that are being projected here, if we look at we're looking at 56.37. This range right now, R1 is the target, S1 is the downside target, 55.86 to 56.37. If we're extending up, we're going to most likely have a fairly volatile day here as far as the models go. Range breakout, if it breaks over 56.36, and it's looking at R2, that's what I was just suggesting. And then, like I said, in yesterday's sheet, if I brought that up, it was like a perfect R2 hit, and we rejected off of there. And by the end of the session, we had a 70 handle move off of that. So there was a very big trade. And a lot of that, most of you know, I'm up late at night, my local time, and usually hanging around the first 2 to 3 hours of London's opening, which if you happen to be in the UK or in Europe, I'm jealous because you can do it in your early morning. But it's one of the most significant times for the S&P E-minis to trade. There's a lot of liquidity, and literally right as that happens, it's about 3 a.m. in New York, so you got your 3 a.m. early traders coming in. So by the second and third hour, you've got pretty much a pretty big New York U.S. cast on at least East Coast, and maybe some crazy people like me that are up in the middle of the night. But a lot of trading can be done there because of that. But watch these sheets as you go forward, and it's interesting because the primary trend that the sheet is throwing out, and you have to remember this is Pocket Bob or Virtual Bob. I've told it so it's consolidation with a bullish bias, and it's interesting because I hadn't looked at the sheet I'm looking at first time with you as I went through the analysis we just went through S&P. That's basically consolidation. There's still an upside bias. But this is the big one. I'm highlighting it. I'll take that off so you can see it. Mature uptrend phase, and this is also what I was telling you. You would think I typed this up as I did that, but the bottom line is this is what's going on. So the nice thing about these sheets, you've got the key insights over here. These are always very, very helpful. We've got we're very near some of these numbers, and then down below here, it gives you the probabilities of the targets. Right now, 65% chance we'll hit 56.37, and we've already went through this 56.50. We're actually running as I speak here. We're up 33 handles right now. We're right at 66. We're at 55, so we're very close. Hang on one second. All right. A lot of times when I'm on the broadcast, I miss trades, so I just put in some orders to put that 66 R2 number on the short side. Last night worked out pretty good. I think what will happen overnight, just talking overnight trading for a minute, is that we'll see it probably trade back in toward London. As we come in the U.S. Open, we'll probably soften up a little bit just because of the employment numbers that are coming out. Okay. So back to the NASDAQ now. Sorry for jumping around, but the configuration that we have here is, like I said, it's consolidation with an upward bias. You can see the slight upward bias. We probably have the ceiling at the 200, which is going to be, right now, that number is close to the same. STX for today is 19,313, and then we come down 20,303, so just a touch above where STX is. With all, we're already getting some pretty interesting numbers. Matter of fact, I got hit on some orders that I put in already. So the point is that we should see a little bit of a retracement. There's probably a trade here. I'm not sure it's a big one at the moment, but I think the ranges that are on the data sheet I've just shown you will be valid, and we should stay within the market grid. We very seldom, if you look at the market grid, it's only approximately 12% of the time do we break above or below those orange lines that define that volatility range. And when we do, it usually means that we've got a we get some sideways movement. I just wanted to point out something here real quick. On this chart here, this is NASDAQ. When we got that, this is that big day Wednesday, we closed outside of that orange line, and typically that means 1 to 2 days sideways to down. Sometimes it can signal a top. So we went after that RTX sell signal. We got 8 days basically in a downward shape pattern. And so, we'll see how it sets up. It's nice that I'm glad I blew this up a little bit, because what we're seeing here is that the uh, market grid is starting to turn down on the NASDAQ. So I would just expect a very volatile day tomorrow, and I would use these numbers to trade. If you don't get my Substack, you should get it. It's $8 a month, and it's kendallreport.substack.com. I put these data sheets. I'll rerun them later at night because it's very important to have fairly close. So I'll rerun, and I'll have you'll have data sheets on S&P, NASDAQ, gold, and Bitcoin. So, but these patterns that are unfolding here are very interesting, and I would even argue, if you look at this little rally up here as we got to the 200 last time, this is how it retraced. I don't think we're going to blow through and make a whole new low on this pattern, but I do think there's some potential to trade back down into this Fibonacci pattern that I showed you on the E-minis, S&P E-minis. So we should be able to come back into this same kind of range. Maybe we challenge that low that we made back on the 21st of April. Where was that at? That was 17,700 exactly. So, that could be challenged. That's a long ways from here, but there's going to be a lot of work. We still have upward slope 10. So we're going to have support along this line right here. So we're probably looking, and you can see the red dot is just saying we're going to go sideways in here. And that may be all we get. Like I pointed out on the S&P, we get that zigzag formation, and that's what happens. The good news is the strategy: sell the out of money calls, sell the out of money puts, trade against this 200, and use setups even off hourly 15 5-minute charts when you get these critical levels, and there's going to be trades off of those, and that's exactly what happened. Yeah, man, I got filled on all those, already profitable. Bear with me one second. I got trades off at 62. I'm not going to get cocky just yet, but it's already moved down in a pattern. I'll save some trading power if they make another new high. But this is just going to be a rejection off of these levels here. We'll see how things end up trading here. All right, so let's go ahead and let's go over to the 10-year. And I was talking yesterday about that I thought we'd see the bottom. We probably saw the bottom end of the range, and we're probably going to come back into 4.25, high end 440, extreme 395 on this if we went for a big range, but we're probably 415 is going to be the range. And it looks like this is a daily chart. I'm going to show you a monthly chart, a weekly chart here next. But this looks like we're back above the 200. We've been the 200 has been trading on either side of the 200. We got a little decline here. This was going, into April 4th. And of course, that was the big Wednesday. And then, here we are again. Let's take a look at the weekly. So I didn't bring the weekly up on the NASDAQ, but this is happening. This is the pattern that I've been talking about, and I'll try to bring it up on Substack. I'll make a note to myself about that. But the bottom line is we should just see, it looks like we're going to just stabilize right here between, like I said, 395 extreme, and then up to 445. The day before everything turned around here, I saw some guy on Bloomberg, I think it was, and he was talking about, rates are going to, the long bond's going to go to 320, and he had this big bullish scenario for bonds, and they just, the next day they reversed, right? So, and I've certainly been there where I I'm calling for something and the reverse happens. But for the most part, when it comes to bond, I'm an old time bond trader going way back, and I've traded a lot of bonds in my life from an institutional standpoint. So literally hundreds of billions of dollars of bonds. And this the good thing about the bond market is very big, and when it moves, it everybody feels it. And so, we always used to laugh at the equity guys in the equity trading room next door compared to what the kind of numbers we were doing in dollars and everything was kind of a joke compared to what they were doing over in the equity room. But the bottom line is this a big market. I think the range I laid out is where we're going to end up. As long as we stay within those bounds, everything's cool. If we start to get below or above, there's that will be kind of your barometer of a number to watch to make sure if you see the 10-year going up over that 440 or under that 395, there's probably something going on right then that's pushing the yields on that spectrum outside of that box that I'm talking about there. All right. Let's go to gold. Let me go to daily gold. So we're consent. Yesterday was a pretty big day. I mean, we had it bounced a bit off the lows, but we're starting to break through some of those numbers, and the 21-day moving average is almost completely flat, which means it's vulnerable. And there's some fib targets down here. I thought we were going to hold the 21. We challenged it yesterday. We're trading right now. The 21 is 32.47. We're trading 32.38, so we're just below that number. And I think there's a couple Fibonacci targets down here below, and we're looking at 32.78's already been hit. Let's 31.90, 31.35 is a possibility, and we're seeing further downside right now. PPM1 is at a minus 0.30. PPM2 is still positive, so that's why that 21 is kind of gravitating around that 21-day moving average value. So we should trade below, up to and get rejected anything close to that 10-period moving average, which is 33.26, and we should hover around this 21 with the potential of going down toward the 40-day moving average, which would be that extreme. Right now, that's at 31.45. And so we should stay within that market grid range, but also within the configuration of this. Let me blow this up so you can see that a bit better. Yeah, so you can see you can see we're right at the 21 yesterday. We traded down below it, rebounded back to it. That's because of that positive PPM2 value. We're still there, but we're starting to see it roll over. And this downtrend that we're seeing here on the 10, where these dotted lines are being forecasted, we should stay within this little triangle that's being created by that. But ultimately, the fib targets are suggesting just round numbers, 31.89, and then the possibility of getting down to like 31.48, 31.50, we'll call it. But that's within the pattern. I think on a longer term basis, we're definitely looking at the potential that gold has made an intermediate high here. I'm not super negative on it, but I do think we've printed a high where I have my cursor right now on April 22nd. That was the big number. I'm going to do something I normally don't do, but let's do silver because I know a lot of you, there's always somebody wanting silver. This is, you know, I've had this argument for a lot of years, but silver is, you can do gold silver ratios, you can do all that stuff all day long, but silver lives in its own little world. And I know the whole Morgan Stanley manipulation. I know all the stories. I've heard them all. But what happens? The issue with silver, the stuff is everywhere. Okay, like if you're a copper miner, you're going to get silver. There's a lot of it. There's another thing, and I trying to think if I can come up. Maybe you guys can help me while I'm talking about this. There's a ETF that has all the miners, specifically gold miners. But if you know a good ETF, I'd like to review that. So give me that symbol, if you would, just put it in the chat. And the reason why there's people always go crazy. I used to run I had a hedge desk that I set up back in, I'm trying to think, 1992, that we worked with gold miners, the institutions, and hedging their pipelines and stuff. And that was probably the most educational thing I've ever done from an institutional standpoint, is how the miners think. And there's a reason why when the gold's going up and you're always frustrated as a mining trader. Thank you for that, guys. I'll take a look at that. There's a reason that the miners don't trade with the underlying metal, and there's a lot of that going on in the oil patch as well. But you can see, nice little rebound here. It's like risk on. It was a nice trade for sure. But now we're just kind of back to where we were. So let me see if I can put this, what is it, GDX, right? Okay, cool. Thank you so much. So, and they've been doing a bit better, right? So even in spite, they have boosted up, but look at the retracement we're getting. And this is what the great revelation that we found out, is that these guys don't want to hold their inventory. They forward sell everything, sometimes 2 and 3 years out. They're selling production out in the future. So they never get the benefit of the gold price, because they're always showing loss. If gold does move too fast, they've got losses on the books off of the hedging operation. And we ran for a couple pretty big companies out there. They're worked with their hedge desk and just learning that. And that's why it's so frustrating around these miners. And there's good trades there, don't get me wrong, but the relative, and this looks pretty good. I haven't looked at this for a while. Let's go to weekly. I want to look at this because looks like some decent participation after a long time of, yeah. I'm just going to try to condense this as best I can. And I'm just trying to get a view. Let me get off screen so we can just go through this just a little bit more. But when we start to look, if we look back, I'm going to try to move this so we can see. Here we are in November 2011, where my cursor is over here. And this index was higher then than it is at 3,300 gold. And that's my point. Even this rally, had they done well? Yeah. Was there a good trade? Absolutely there was. But these things just don't, there's no relevance between the metal and what these stocks are doing. And they were probably unhedged during that time, and they were able to actually bring some money to the bottom line. But it was frustrating as hell, because we were trying to consult these trading desks at these firms, and like, hey, you guys just need to stay loose for a minute, let this thing run, and then we can put some hedges on very strategically, right? No interest. Boss says forward sell everything, don't take any risk, just take the margins off the mining operations, and that was that. I mean, it was frustrating. So uh, it'd be interesting to to talk to an analyst, and I worked in Merrill Lynch research for a while, and I never talked to these guys. It was like too big of an organization of analysts around. But I can tell you that the bottom line is all of these guys, I think the same way. So, but that's the primary reason. And like I said, you see the same thing in a lot of commodity related stocks. And it gets really frustrating because I hear it from people or see it around the internet. I've got friends that are heavily involved in mining for like decades and decades, and this is always it. So actually, I've squeezed this down. I'm going to go off screen, but this is going. This only goes back to 2007. But look at this. This thing's a mess. There's some nice trends. There's tradable trends. Don't get me wrong, but then if we go back here and put gold on, it doesn't look anything like that, right? This is going back to 75, but even just coming back here, I mean, you got trends, stair-stepping, prices going higher, and then the miners aren't doing it. So I think I sunk my putt. Okay, so yeah, so that's at least my viewpoint. I mean, this was a 30-year-old lesson that we learned from dealing with these people. So it's not like maybe it's changed. It doesn't look like it has. The mentality there is what I said. Yeah, I'm just looking at some comments here. I forgot. Hang on a second. Let me just see, since I went off on that. Yeah, just looking here, a couple comments, so bear with me while I'm reading a couple of things here. Yeah, that's my point, Justin, is this shit is everywhere. Excuse my French, but yeah, why are we rowing? Are we still rowing? Oh no, man, I'm making some bank right now. We're trading 55. I'm short at 62. So okay, glad I put that on at the moment. Yeah. That's funny. Thank you. Thank you for that. Yeah, anyway, I'm running the Bitcoin, so I'm sorry I was muted. But yeah, Bitcoin. What hopefully I'll just repeat what I said a minute ago is we're printing up here at 90. High's been 97 201. I think if we break over 100, then we have targets there at 104. So I'm running a daily sheet here, and hopefully it only usually takes about a minute and a half, so I'll be able to show you the daily projections for Bitcoin. And it's interesting because we're right at, it's the way, so classic. I got an error in the sheet. I don't know what it is. Bitcoin always breaks my data sheet. I have to figure out why it's doing it. So it's not letting me. So it's a fail every time I try to do something like that live. Yeah, all of a sudden the page becomes unresponsive. I've seen that happen before. Anyway, but if we get over that, over 100, we're probably 104 print, and then there's no reason in the world that it's not going to be, that we're not going to probably challenge the 109 highs and maybe make new highs. I've talked about these patterns before, so sorry about muting out. Let me look at a couple comments and we'll finish up here. So is that what's going on? New highs in Trump's world peace plan? Is that true? Is that what's going on? They took all my money back, so I was going to take profits and reposition, but we'll see if we reject up here. I know, Michael, you love that PFE, man. I know it. All right, folks. I think I'm going to call it quits. We're right at the hour here. Sorry about the mute. Hopefully it wasn't too long. I'm just just a couple quick comments here. Okay, folks. Let's wind it down. So, as we come into tomorrow, just do a little conclusion here of what I think is going to happen. I think we're going to get the markets are going to see a bit of a reaction. I think we're at a point where we're going to see some backfilling. Could carry into Monday, Tuesday. If you didn't see the beginning of this stream, then go back and watch the replay or rewind. I think you can just pull the bar back, but probably around the 10 to 12 minute level. I'm trying to get the videos all with chapters in it. Right now that's not happening. That's the next thing I'm getting cleaned up. I'm a little disappointed. I put a lot of work into some new software that I wanted to stream with tonight, and I'm not sure what I'm doing wrong. So I will research that. So maybe Sunday night we'll have it, and that'll be that. Anyway, I appreciate everybody showing up. Another week. I think this is 3 weeks in a row. Everyday videos. We're back. And just a quick comment. If you don't have the Substack, get it. It's kendallreport.substack.com. There's a 7-day free trial. It's $8 a month. the annual is kind of off the books now, and we're just going to go forward with the $8. And the I guess my expectation is that we will see some kind of retracement, whether it be substantial or we end up more consolidation the weeks to come by. We're coming into the second month of the quarter, which is likely to be, I think, a consolidation pattern going through maybe all the way through the end of June is what I'm expecting. And at that point, we're going to finally have maybe enough we'll know if we have any trade deals or what's going on from the standpoint of the tariffs and all the stuff that we're dealing with right now. And at that time, it will be in the rearview mirror, but we'll be able to see it pretty clearly what it's probably going to look like going forward. So, hey, thanks for a great week. We picked up a lot of subscribers. If you haven't subscribed, it's free. Just click on the like and subscribe and probably hit the notification bell. Normally, try to be right on the money at 8 p.m. every night. Had a little technical issue tonight, but we'll go from there. Thanks a lot. I appreciate it. And have a great weekend, everyone. Good luck trading tomorrow.